In this particular video, we're going to begin the discussion of what types of investments can help you hedge inflation and protect your purchasing power, the purchasing power that is being diminished currently by inflation. Although I've done a lot of research around this particular subject matter, I am not an economist and I am not a professional investor. Please do your own research and come to your own conclusions. And because I'm limited on how much time I have to film this week, I'm going to specifically focus on gold and silver in this video and why I think it's a hedge you should consider for your portfolio, specifically for battling inflation. Not only do I want to help you preserve your wealth, but I want to help you identify investments that can actually grow your wealth. Now, I'm not going to hide it from you guys, but inflation is really something that personally pisses me off, because it's the government using the monetary system and manipulating the value of our currency, our fiat currency, that diminishes our purchasing power and ultimately our wealth. When inflation is running rampant, it pushes the price of assets higher and higher and higher, but makes the cost of everyday living more difficult for the average person to get by. So it really hurts the poor and middle class, I think, more than anybody else. Like, seriously, look at this graph. I know it's the pandemic and all, but really, what the hell? Gold and silver is the first inflationary hedge I would like you to consider. Let's pull up some historical data on screen now so I can show you why. Here is the historical annual closing gold prices dating back all the way to 1792. If you're focused in on this area of the screen right here, you can see that in the early 70s, when inflation started to run rampant in the United States, gold prices began to increase very quickly, where it went from $38 an ounce to, by 1974, up to $183 an ounce. You can see that there's some very significant increases in the price of gold from year-over-year comparisons. I know this may be difficult to see for you, but 5 years later, by 1979, gold was sitting at $459 an ounce. And it's like this Economic Times article says, people really see and view gold as a way to preserve their wealth from one generation to the next. They look at it as a store of value. Why? Because gold is a hard asset. It's just like another natural resource would be. There is a limited supply. It cannot be manipulated like fiat currency, like the paper money you and I use as the US dollar. So people will buy gold and hold gold to just to help preserve their wealth and really lock in and secure some of their purchasing power. We saw gold shoot up like a rocket in the 1970s. But as we're about to visually see the graph and price movements of gold, observe why you might not want to hold everything in gold forever, but hold it long enough to make a significant amount of profit from it to protect your money from inflation. Prior performance does not represent future performance, but by observing the graph of gold, what we can learn from the 1970s is that gold shot up like a rocket here, and in this visual representation, after 1980 or so, it tapered off along as inflation cooled back down to the $300 to $400 range. From this point, gold really didn't move much until about 20 years later, around 2001, probably around the time of 9/11. Over the past 10 years or so, based on these charts, you can see that GLD, which is an ETF that tracks the price of gold, compared to the S&P 500, if you would have invested in the S&P 500, you would have gotten 3 times the return on your investment versus if you had put that money into gold. Looking even more recently now, though, if we chart GLD over a 2-year period, you can see it would have provided you a 48% return on investment, which is now looking a little bit more attractive. Observing the year-to-date graph, it really hasn't returned much this year. In fact, it's actually down about 1% year-to-date so far. But we could finally, if I zoom out on this, we could finally possibly see potential movement to the upside, because we've never had money printing like this before. So I'm really watching this to see where this goes. We'll see if this breaks out above 180. If it breaks out above 190 to 200, I really think it's going to shoot up quite a bit from there. We've been looking at a lot of historical graphs and charts, and you're probably thinking, well, Mike, how do you know gold is going to behave in the same way it did back in the 70s? And the answer is, I don't. I'm not sure that it is, but it's something to watch for. I found this really interesting article from Business Insider. Check it out. It's kind of creepy, to be honest with you, but let me just read this to you real quickly. It says, while the specific economic problems of the 70s in the West inflation, recession, oil crisis were different than today, there are broad parallels between now and then. In 1979, then U.S. President Jimmy Carter talked about a crisis of confidence in government and the future. This erosion of confidence extended to Carter himself. He lost the 1980 election to Ronald Reagan. And what was Reagan's campaign slogan in 1980? Make America Great Again. That is just creepy. The same slogan that Donald Trump has borrowed as he taps into populist anxiety, eerily similar to that of the 70s. Today's crisis of confidence is a global phenomenon extending from Washington to London to Beijing. The 70s crisis of confidence reached a boiling point in 1979 when, coincidentally, gold surged. We could be on a similar trajectory today. And if you thought gold had a good run back in the 1970s, look what silver did back in the 1970s. It actually went from about $5 an ounce at its low to all the way to close to $50 an ounce way back when. And it didn't hit that point though. Once again, just like gold, it fell flat for many, many years after that. And it didn't come back up to those price levels till about 2009, 2010 or so, after the large real estate and stock market crash. Looking at an ETF, it's the iShares Silver Trust, ticker symbol SLV. SLV. If you want to use an ETF and don't want to own physical silver, this is one way to do it. You can see the blue line, that is SLV. Over the last 2 years, it would have returned you a 90% rate of return, which is almost, not double, but significantly higher even than gold and the S&P 500. Year to date, silver would have netted you, or at least this ETF would have netted you about a 5% rate of return if we were to graph this out. But we'll see if there's more potential movement to the upside. It looks like it could eventually break out here depending upon what happens next. So look at this. I mean, it used to be at a high of about 45 to 50, and it's still only at 25. So something to be watching. I think if this moves up, it's going to probably move up quite fast. The thing I like about silver quite a bit, even more so than gold, is silver has a lot of practical applications. It is used in many, many different things. And so that's one reason why it's such a precious commodity, and one I think you should take a look at. Now, I didn't talk about it much in this video, but there's actually 5 different primary ways to buy gold. Each way has its pros and cons. I'm going to leave a link to this article. I'll leave it down in the video description, and I'll also link it in the comment section for you to check out. The bottom line is, and I'm not going to cover it here, is figure out if you want to participate in gold and purchasing silver and things like that. Figure out which way you are most comfortable with. There are multiple ways to do it. You can buy the physical bullion. You can buy gold futures. You can buy mining stocks and mining ETFs. So there's various ways to participate. And honestly, I'm really not even telling you to invest in gold in this video. I'm just saying this is one inflationary hedge option you have, and something to at least consider when thinking about ways you can protect the value of your hard-earned cash that you work so hard for at your job. So like I said, gold and silver is certainly an asset class to be watching, to look into. For me personally, I'm bullish on it. I'm optimistic. I've never been one who's a big gold and silver investor. I just never have been. It just doesn't excite me because I like investments that pay me income, like real estate or dividends and things like that. However, based on what's going on in our economy, how much stimulus, how much money printing I'm seeing, I'm definitely keeping an eye on the charts. And I would caution anybody from completely changing their investing strategy. Me personally, I'm going to continue doing what I've always been doing for the most part in terms of my investment choices. However, the thing I'm doing differently right now, I'm going to start doing differently as of this month, is when I do my finances every month and my wife and I see how much money we're going to have to save, we typically put some money in cash. Well, we have plenty in cash right now, so we're going to be looking at taking that amount in cash. Instead of putting it in the savings account, we're now going to be allocating that to investments like gold and silver, for example. A portion of that there. We're going to look at maybe cryptocurrency, potentially. We're going to look at the stock market. We're going to look at other investment hedges. So I just caution you to don't get totally distracted. I know it's when inflation's ramping up, it's really tempting to throw everything you have into it to try to maximize your returns. But I would really just advise you to have a portion of your money continuing doing what it's always been doing. For the most part, just follow your plan. And then if you have extra money on the side or even want to take a small percentage of your portfolio, use those funds to place it into inflationary hedges. That's what I would recommend, and that's what I'm personally doing myself. But I'll tell you this, if this video does well, if I see a lot of likes, if I see a lot of views on this video, a lot of engagement, I will certainly make more videos in this series. And the next part I would cover, the next investment we would focus on in detail would be the stock market and what specifically in the stock market you'd want to put your money into to hedge and beat inflation. All right, I'm out of time today, but in the comments, let me know what you think about gold and silver and using that as an inflationary hedge. Do you like the idea of using gold and silver as part of your investment portfolio? Or let me know also, what are you doing to curb inflation and protect the purchasing power of your dollar so the government cannot steal your wealth? I really want to know what you guys think, so leave that in the comment section below. If you want to support the channel, if you drop a like on this, I would greatly appreciate it. Plus, it helps other people see this information. And make sure you're subscribed. I'll have a lot more videos coming out around finances, investing, and taxes, so stay tuned for those. Until then, have a great week, live life uncaged, and thank you so much for watching. Peace.